Well, the Bank of England rate decision is the headline for this week, along with Eurozone flash PMIs. And joining us to get across that, what's going on in currencies and commodities, Pete McGuire joining us from XM. Pete, a very good Monday morning. Hope you're looking forward to a new week ahead. Let's start in the UK with the Bank of England's decision later this week. Look, it's in an invidious position, isn't it? Because it's fighting very high inflation, but there's also signs that that economy is weakening quite considerably.
Absolutely, Andrew, and good morning. Yeah, that seems to be the rhetoric, and we're all keeping a very close eye on it. You know, there's a big chance you're going to see 50 basis points, and that's I think that will scare Main Street. But we've just got to see how it drops, and you've got a pound sitting at around about 1.2820. So there's been a lot of movement there across the pound versus US dollar over the last week and a half or 2 weeks. So, yeah, quite exciting to trade.
Yeah, of course, but the focus being on where inflation is sitting at the moment, Pete, with it's way ahead of most developed nations here.
Absolutely, Andrew. I mean, you know, it's really got to have it's got to fall off a cliff and come back down to, you know, that 6%. And are we going to see it over this summer period? And that's the dilemma that's facing their central bank. So the Bank of England, they're saying, do we hit it for 50? The Swiss may do the same. And this is I think the general consensus at the moment. There's a very big possibility that that could be the pathway forward for them.
Meanwhile, Pete, across the channel, how's the Eurozone looking at this point?
Well, Andrew, I mean, you know, you've got recessionary fears coming across many of those nations, still got relatively high inflation numbers, and we all understand what the ECB did last week. So are we going to see further rate rises in July and over the summer period? You've got, you know, flash PMIs coming out, and as you see on the chart there, that seems to be the issue. You've got manufacturing really cratering, but the services and the composite are still doing okay, considering, but it's going to be a very interesting week because the Swiss play, and do they see a 50 basis point move to the upside as well for their Swiss National Bank?
Yeah, that's interesting just as far as what they're seeing in Switzerland at the moment. Probably the envy of the rest of the developed world, it has to be said, given what inflation is down at about 2.2.
Yeah, exactly.
But then you've got hawkish language coming from the central bank at the same time. So what's the reasoning for that?
Well, they've really had to play catch up because they were in, you know, zero for a long period of time, and I think they even copied the Japanese there for quite a long period where negative interest rates. So they're playing catch up. The consideration is, you know, do they hit it up 25 or 50 basis points? And it's been fairly hawkish from their minister to say, yeah, it'll probably be closer to 50. So, well, that's what we've interpreted. So I think that's where we sit, and it could be an interesting week for the Swiss franc, the gold market, and some of those crosses.
Yeah, and you referenced Japan there, Pete. Let's go there. Now, of course, that's on the back of this decision last week to keep rates where they are. Now, the yen suffering, it continues to fall.
Yeah, you know, 142 nearly, Andrew. We're at 141.80, 141.90 at the moment, and I won't be surprised to take a 142 sometime today. You've got a Nikkei that's had a very strong rally over the last 3 to 4 months. It's just been extraordinary. And the overall consensus is, are we going to see some form of intervention from the Bank of Japan if it hits 145? Remember that, you know, you put your mind back 6 months ago and we had it at 150, there was intervention, and I think there was also intervention at 145. So that seems to be the mantra on all the traders' mindsets. You know, are we going to see a big purchase as far as, you know, central bank intervention? And that's the exciting market that we trade, Andrew.
Yeah, absolutely. That's why you're in it, Pete. We understand that. All right. So with yen under pressure, let's take a look at the Aussie then. In contrast, actually received quite a bit of support. Do you see that continuing?
Well, I do. I think that big stimulus number and the general theme coming out of China seems to be upbeat, and they're embarking on a very major stimulus to revive the economy. So there's the first part. We're going to be a proxy for that. We've had a nice rally to the upside. What are we at 68.75 or so? So I think you'd probably see a 69 sometime in the next 24 to 48 hours. I won't be surprised for it to happen. And maybe a little bit further weakness as far as that US dollar index sitting at around about 102.30. I think there's, because we didn't see anything from Fed Chair Powell, we'll see it probably in July. So it's a little bit of argy-bargy over the next week or two.
Yeah, Pete, you mentioned what's going on in China with speculation. Well, certainly as far as its prime loan rate is concerned, a cut there, but
Yep.
also further stimulus as well. So that has the market potentially excited.
Well, it certainly does internally, and naturally, we understand the property sector for such a large component of their internal economy. So there's the first part. Secondly, is they didn't come out of they came out of the blocks quick after COVID, Andrew, but then they sort of languished come late March, April, May, and that's where you've had to see significant stimulus or certainly rhetoric towards that. So I think it's going to be, again, over this summer period for them, quite an interesting point in time. They're going to trade their way out and stimulate their way out. Not unusual for them.
How do you see that playing into commodities this week?
We had a pullback as far as energy, but it's had a nice rally to the upside over the last about a week or so. So probably just a little bit of profit taking, but I think there's further upside for energy prices. We've had a big tick up as far as copper, some of those base metals you mentioned that they've had a nice rally. So I won't be surprised for that to continue. And I think it's probably not a bad time as far as mining's concerned. Some of those miners will do quite well over the next couple of weeks to a month or so.
What are you seeing with gold at the moment, Pete?
1970, and I think I'm just looking at the 1971, Andrew. So it's given up a little bit, but it's choppy. I think that overall, I still go along with a Goldman's number that everyone's saying it's 2,200 by the end of the year. So we've got 6 months to run, and I think its best days are ahead of it. So I think it's still very well positioned, and I won't be surprised to see it take that number out sometime between now and then.
Yep. The support of certainly what the gold bulls would like to hear. So let's then round it out with digital gold. Bitcoin has been under some significant pressure, not the least because of the regulatory overhang we're seeing at the moment.
Yeah, exactly right. And there it is there at about 26,540 is sort of like the number at the moment. I saw that as far as where the SEC were playing. I think it's just a wait and see. We've had a big correction to the downside, and probably it's going to be choppy. So yeah, it's hard it trades 7 days a week, 24 hours a day. So it's certainly, if you want to trade it, there's plenty of opportunity, Andrew.